I'm right here. Good morning, guys.
Hey, did you just hear our last guest?
I did. Nate's a smart guy. I followed his work for a while. Didn't really disagree with anything that he had to say. He's been around a while, does a great job, and yeah, I'm a big fan of his website.
Okay. All right. So, how the markets have been treating you lately? We had that big decline and the snapback rally. I know you're
What,
always you're
what,
always
what big decline? That 3% down? That little blip thing?
I guess that's what we've become accustomed to, right?
Well, boy, we all when we see a big decline, we're all going to have kind of an awakening. But yeah, the only thing that I disagreed with Nate, by the way, is he was talking. He said the consolidation wave that everybody's looking for is not there. Yeah, it is. We're starting to see the pace of deals pick up in the small bank space. We've had 133 deals worth $6 billion so far this year, which is running about 20% ahead of last year. Now, I don't think we're going down to 12 banks, but I think the number of banks in the U.S. is going to, over the next decade, shrink by about 30 to 50%. It's pretty much inevitable.
You know what? I think I might be right in the middle between you two because I think he was just kind of talking about big banks buying other big banks,
Well,
and because he did mention that, that I thought he did mention that, these acquisitions by the bigger banks or the smaller banks are accretive to earnings right away.
yeah, it's the regional banks are doing some buying of the smaller banks, and that's what
Okay.
you have going on in the
Okay.
space. Regional banks are desperate for earnings growth to make their shareholders happy. There's none out there organically, so they're buying the smaller banks, and I think that's where the real money to be made in the small community banks is. But he's spot on. Banks at 80% of tangible book value with solid balance sheets are win-win.
Okay. So you do use his site for some of your research, huh?
I do not use his bank database. I have my own. The difference between Nate and I is he'll share his and I won't. So,
And for good reason. So, have you? I know you hit one out of the park the last time we were on. And I know it's hard to do that on a regular basis. But have you had any rumblings on any of your holdings that are giving you a little bit of optimism, or just maintaining the status quo here?
I'm optimistic about all my banks, but of course, this week has been a very busy week around here. We
Tell us about it.
put the Banking on Profits monthly issue to bed this week, which involved a whole bunch of research and statistics and stuff. But more importantly, it's 13F filing week. Are you guys following that at all?
Oh boy, we just if you would have gotten out of bed earlier, you would have heard our like first 15 minutes. We were going over that. Of course, yeah. What did
Okay.
what did you glean from those filings?
It's I started following these back in the '90s when you had to actually write to the SEC to get the report back in writing, and then you went through the stock guide for a few hours. I think it's hysterical how much coverage is being given to these things, and everybody's following the same 10 guys. What did Warren Buffett buy? What did John Paulson buy? What did David Tepper do? And I don't think there's any value added in following those same 10 guys. I don't really care who bought Apple last quarter. You want to know who bought Apple last quarter? Everybody. Okay. So we all get very excited about it, and we're looking at these top 10 or 20 funds, and the real information in the 13F filings is in the smaller guys, just like the real values in the smaller stocks. I mean, I don't really care what Warren Buffett bought in the last quarter. He and I have incredibly different profiles. I certainly don't care that much what Bill Ackman bought in the last quarter. But I'm pretty excited to see that three small bank activist funds have all bought shares of a recent thrift conversion, Causeway, out in Rhode Island. That's CWAY, if you guys are following along.
Okay.
And it's one of my large banks.
Yeah. What's it have? Like a 10 million market cap?
No, I think it's a little bit better than that, as I recall. So when I see the small bank activists are out there doing that, or that Paul Isaacs, who's one of the most successful hedge fund guys out there that nobody's heard of over the last 15 years, is Walter Schloss's nephew, by the way. It's a great story. But he's buying a lot of small banks in his portfolio. And I got to say, most of his are too small to talk about here. So that's the real value in the 13Fs. It's like John Templeton said, you're never going to get rich doing the same thing everybody else is doing. So if you're following the same 10 guys and reading those same 13F filings that everybody else is writing about and talking about, you're not going to find any real value or real advantage over anything. Now, for instance, I did not hear earlier this morning, but which filings did you guys talk about?
All the big boys, right?
All the big boys.
Yeah, we
Yeah.
talked about, and we also pulled up the charts of some of these, and it was just ridiculous, what went on. And we were just talking about the pre-market trading. You had DuPont, a slow-moving stock, move up considerably. Or no, not DuPont. It was Dow, DOW. Ridiculous spike in that, came right back in. Another one, Chicago Bridge and Iron, got a little pop. That was Warren doing that. But pretty much a lot of these pops that just came out initially, Tim, you're exactly right. These were pops to fade.
Yeah, I mean, I was actually one of the first guys to, I think, start writing about 13Fs, and it's just built into such a snowball, and there's entire websites, devoted to who's doing what. And, I don't even cover or write about what Warren Buffett's buying or even what Seth Klarman is buying. As much as I admire Seth, they pick this filing over the minute it comes out, the millisecond. I have to be honest and say I kind of prefer the old days where you had to write to the SEC and nobody really cared about these because we had an enormous advantage back then. But these days, the minute the filing hits, it's public, so everybody's picking over it. So, rather than watch what these big guys are doing or talk about the Apples and the who's buying Microsoft, I mean, again, everybody. Or Chicago Bridge and Iron, everybody's been big on that one lately. I'm more excited to look down and see that one of my little oil drillers, Hercules Offshore, which has been coming down in price. They lost a contract for one of their rigs off the coast of Angola. Apparently, the government there did not meet the contract requirements. Have a hard time imagining a fine government like Angola not meeting the contract requirements. But the stock's down at 60% a book. And I take a look here and I see that, some lesser known but incredibly successful value investors like LSV Asset Management, Aegis Value up in Northern Virginia, Tocqueville, and Royce Funds have all taken significant positions in the stock. Now, I don't buy or sell strictly on what these guys are doing, but I own Hercules, and I feel a lot better about my position and knowing that a bunch of other smart guys also own the stock. And by the way, if that one slips much more than a penny or two here, we're going to be doubling down on it. That's a great stock and a great story. If it just trades back up to book value, you make a ton of money on it.
And what's book value on it?
Well, it's trading at 60% a book. It's $3, so
Okay.
book is up close to $5.
Do the math on that.
Yeah,
Okay.
a little backward math this morning.
Yeah, okay. This might be a little bit out of your wheelhouse, but I'd like to ask you about this Monster beverage. Did you see what's going on with that today?
I heard they had a great report and the stock's moving higher, but I mean,
Well, Coca-Cola bought a 16.7% stake in it for $2 billion, and it was a
that's,
co- and it was a company that was valued at $12 billion. I mean, and the stock's trading up $20. I mean, can you make heads or tails? I mean, obviously Coca-Cola is looking for growth because only so many more people are going to be drinking Coke. Probably, actually, less people are probably going to be drinking Coke because of the new health drinks that are out. But can you make heads or tails out of something like that?
no, not at all. How
Okay.
much did you say they paid for him?
They paid $2 billion, 2 point some billion for 16.7% of the company, and previously the company was valued at $12 billion.
So excuse me, guys.
Makes
They
no
only did
sense.
two billion in sales. I mean, no, I can't make sense of that other than Coke wants to be in the energy drink market in a bigger way, and they've got a lot of cash and are willing to pay for it. Other than that, that deal makes no sense to me at all.
I guess they're not worried about the health scares that the Monster Beverage had about a year ago, but we'll see what happens with that. Just going back to the 13F filings that you do pay attention to. I know you've mentioned Wilbur Ross a few times on the show, and he's a pretty big shooter. Are there any other guys that if our traders or investors are going through the 13Fs, are there other guys that fly under the radar that they may want to pay attention to the recent moves?
One of the biggest ones really is Paul Isaacs at Arbiter Partners. I mean, they're just shooting the lights out with returns well north of 20% over the last 12, 13 years. And they're long and short, so you can get ideas on both sides of the market. And I really think if you want to be in the small bank space, you absolutely have to be paying attention to what the guys at PL Capital are doing. Two partners there both have extensive backgrounds in the banking industry. So when they file a 13D, and going to talk to banks, they don't just say you need to make things better. They say we've been over all your items and reports, and these are the 15 things you need to fix right now or sell this bank. Have a huge advantage over some of the other bank stock investors.
Okay, and is there anything that you've been holding? I mean, you mentioned that Hercules was working against you a little bit. Is there anything that it's been a little bit of a thorn in your side lately? Kind of. I mean, I know you don't mind when things go down because you just buy more and hold on forever. But if there's any, is there anything that is kind of working against you a little bit that might provide our investors with a possible entry point?
Working against me? No, not really. I mean, it's a lot of my stuff's going sideways here because we're just not on anybody's institutional radar screen, and this is very much an institutionally driven market.
Okay.
But I really do think that you've got great entry points on the two small REITs I talked about last time, preferred apartment communities and Campus Crest. I mean, they're trading at fractions of book value with 7.5% plus dividend yields, which is kind of tough to find in this environment. So they're both growth and income stocks. You can hold these for a long time and just collect that 7.5% dividend. At the same time, they're in multifamily and student housing. So they're in two great sectors of the market where a takeout or revaluation of these things is not out of the question over the next year or two.
Well, your stocks don't go against you because if they go down, you're just out there buying more.
Yeah, the only time we dump a stock is if the fundamentals change. I use a credit model to score these things. And if they drop below a certain level in my credit model, that's the only time I'm going to sell them. If the valuation of the company doesn't change and the balance sheet is still okay, this is like, all right, steak was $10 a pound this week. It's $5 a pound today. I'm just buying more.
Okay. All right. And then I know you don't like to talk about the overall market that much, but boy, you had those geopolitical concerns last week, took the S&P futures under 1900. We snap right back up here. Not quite back up to all-time highs here, but certainly, from the way things were looking last Friday, a great rally. Are you just a believer here and just buying every dip, or are you a little cautious? You think people could be a little bit more cautious on this rally?
I'd be a lot more cautious. And here's and I'm not a macro guy. You know that. Occasionally we'll make a macro call and get it right, but that doesn't mean it was a smart bet to follow me on it because I'm usually wrong about these things. But my one macro comment is there's a firm out there, and this will come from the 13F filings. Tweedy Brown's been around forever. They were started as Ben Graham's broker. That's how long they've been around. Went through the, various big, more of a merchant bank. Then they offered institutional services, and now today they offer mutual funds. They've been doing this a long time. They had very few buys and just a ton of sales in the second quarter. And if you go in and you read their second quarter shareholder letter, the partners say, we're holding about as much cash as we've ever held. Ever held. Okay. Cash levels in the various funds are between 11 and 30%. And that's the most I've ever seen them carry because they simply cannot find anything to buy. Now, I've been saying that for a while. These guys are smarter and better looking than I am. So when they say it, you start to get a little more extra weight on this thing. There are no cheap stocks in the market that I can find that I don't already own. The only pocket of real, okay, I can be fully invested here is those small community banks. But in the broader market, I don't see a lot that's safe and cheap.
Okay. Well, hey, that's been your mode of investing for a long time, and it's worked for you. So stick with what got you here. Tim Melvin, he's a Marketfy Maven and author of the Tim Melvin Deep Value Letter. You can find his product on marketfy.com. Tim, thanks a lot. You always, knock a little bit of sense into us whenever you come on the show, and we really appreciate it.
Guys, it's always a pleasure. Thanks for having me this morning.